This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past week or so. It's been a relatively good week in financial markets, particularly for equities, and that's partly due to continued very strong policy support. This week we've seen the European Central Bank increase its bond buying program by perhaps a bit more than markets were expecting, and we've seen a significant stimulus package passed by the German government. And that's been very helpful for financial markets, but we're also obviously keen to see that reflected in improvements in the real economy. One of the indicators that we keep an eye on is the initial jobless claims figures in the US. It's weekly data, so it's closer to real time. And as you can see from the chart, the number of people sadly out of work, looking for work, has spiked dramatically over the past couple of months, really dwarfing what we saw during the 2008 and 2009 period. It's a figure that's beginning to come down, which is good news, but perhaps not by quite as much as financial markets were expecting. So it's one indicator, obviously, amongst many, but it is something that we keep an eye on. And as we say, we'd like to see that begin to pick up a little bit more. Partly because when we look at financial markets, particularly equities, we think that equities are already discounting a fairly rapid recovery over the next couple of quarters, and we're looking for data to either confirm that or to suggest that it's actually going to take a little bit longer for the global economy to begin to recover. Elsewhere, we've also seen that the policy stimulus has really overshadowed some geopolitical concerns. And here we'd point to the US-China relationship, which has, broadly speaking, deteriorated over the last couple of months. Remember that trade was a very big issue for financial markets several months ago, and the situation there between these two countries has not significantly improved. If anything, it's deteriorated. For now, monetary policy or fiscal policy seems to largely have overshadowed that, but that may not always be the case. And then finally, we're looking at the shape of government bond curves. What we've seen, particularly in the US, is that the yield on long-dated government bonds has increased faster than the yield in the short-dated government bonds. And the question there is really how to interpret it. It's challenging, obviously, because central banks are very active with their bond buying programs. But traditionally, you might argue that a steepening yield curve, as it's referred to, would indicate that the economy is likely to strengthen. The other question, though, is what happens with inflation. And given the amount of stimulus we see, there's a residual concern that inflation may pick up at some point. Now, that's an argument that's been made for a number of years and so far hasn't come to pass. But it's still something that we keep an eye on, really to understand how the sort of unprecedented levels of policy support and policy stimulus could factor into prices. Thank you very much for joining us, and look forward to speaking to you again soon.